Going with the black hat.
We want video.
Sure. Mark, you're mute.
Sorry about that. I was going to say, if anybody wants to buy this Trade Like a Champion hat, it was designed by my followers on Twitter, and all the profits go to charity. They go to Mercy Ships, which is a great organization that has these big ships that they built, and they go around the world and help. They do operations. They have actually hospitals on these ships, and they go and they do operations on children and people that are deformed. And it's really, take a look at mercyships.org. It's a great organization. So anyway, Trade Like a Champion caps, the profits go to that organization. 100% of the profits go to charity. All right. Anyway, you can find them on Amazon. You go on Amazon, just put in, I think if you just put in Trade Like a Champion cap, it'll come up. Let's see here. All right. So
see, not nearly as impressive as me, Mark.
No.
He's got shades. He's got one monitor behind him. I got 13.
Oh, I know. Look at Mark. How do you make all that money with that little setup?
You don't need the fancy stuff.
My setup's pretty. I only have 2 monitors, 3, but I use 2. So I'm gonna share my screen in just a minute. We'll get started at 8:30, and I have to say that I did not find a whole lot of stocks. It was a pretty piss poor results from screening. So we'll see what we can make out of it today. Bob, we may have to defer to you and do some day trading.
There's not a lot I'm seeing either, though, unfortunately.
Yeah. I do see a lot of RS lines hitting new lows. I run a RS new low relative strength line. It looks for shorts and also tells me the health of the market. And there was like 570 RS lines hitting new lows. That's not the best sign. Let's see here. Alrighty, so just set up my screen here. One second.
All right.
All right. Well, we're supposed to start. It's not fair for me to start before 8:30 because then people will be like, "Hey, you said 8:30," and they come in then and they've already started and they get upset. So we'll wait until 8:30 to get started. I'll give you a second here. Couple more minutes. Probably get something also to
Mark, did you do a test post?
Me or
I'm going to say Richie for Richie.
Yes, I did.
All right. I'm going to say Richie for Richie. Skype, check Skype.
Okay. Hold on a second. Be right back.
Eric, the rant was set off by a comment that somebody asked her was questioning Mark's numbers in the mind-blowing math. So he wanted to make sure it was clear that not only are the numbers right, the math is right, Mark's methodology is right. He's achieved what he's achieved from everything that he has put together from this weekend that you've been learning. And if you follow it to a T, I can tell you with certainty, with hundreds and hundreds of examples of successes that have happened, wealth created, and the comment we use, more consistent, more profitable, more successful trader you will become. We won't discuss Richie. We won't discuss the Bears, but we will talk about my Eagles. 2 in a row. It's been a long time since I've been able to wear 2 weekends in a row. A long time.
Only thing worse than the weather in Chicago right now is our football team. So
yeah. Well, you know what they say. Bring on the draft picks.
that's pretty much the mode I'm in right now. Fire our coach, and hopefully we get some good picks.
Yeah. I actually want them to lose, even though they're starting to come together well as a team. It's like I'd rather get top 5 draft pick and enjoy that. We're not going to win the Super Bowl this year. So order the hat. How do you order the hat, Rafe? Just go onto Amazon, amazon.com. Type in Mark Mינארווני hat. And you will see only one option, I believe. Should only have one option.
I think trade like a champion hat.
Yeah, maybe you can type
Trade
in
like a champion cap, I think. Let me see.
All right, David Ryan has come in. Let me promote him.
Ryan is in the house. Yeah, I just went on trade like a champion cap. And it comes up.
Cap.
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 Yep, trade like a champion cap.
Not hat to do that. All right. All right, there's David's great smile. And check now, Dave, with your camera. Should be able to work. I've given you access in your microphone, Dave. There you go.
I just had to set up my microphone.
So that sounds like the boom mic, or is that your headset?
That's my boom mic. I just don't. Wearing that headset for 5 or 6 hours isn't that fun.
Do you have your camera working too?
So yeah, I got the camera.
Very echoey.
There's yes.
It's very echoey, Dave.
There we go.
Yeah.
I mean, I can switch to it. It's just kind of I have to get another one that is a little bit more comfortable. Mark Ritchie, how are you? No, I can't hear you.
I'm well. Good to see you, Dave.
Oh, good. Nice to see you.
Guys, if the 4 of you could just look at the camera real quick. Just want to take a quick screenshot. Get a couple seconds.
Okay.
Bob, Bob, you're so casual. I mean, you should actually be trading with your shirt off.
Well, if you look down below, We only go this. The camera only goes this far, Dave.
Well, yeah. I don't even see
I
your
do
hair.
have my Eagles shirt.
No, I don't see the
Gotta
yeah.
represent here.
Yeah, we're just glad he has pants on.
No. There's no confirmation or denial of
Tell you
that.
a funny story about. I used to go on with. Remember Mark Haynes from CNBC?
Yeah.
So I went on CNBC in the '90s, and I've never gone on with Mark Haynes before, and he was a real big shot at CNBC. By the way, it seemed like everybody was scared of him for some reason. I don't know, but I was ready to go on, and the producer came over to me, or the person that was bringing me on, and said, "Whatever you do, don't say anything about his moccasins or his pants." And I said, "Okay." So I go on, and we go on air, and I look down. He's got a suit and a tie, a jacket, and he's got gray sweatpants on and these dirty moccasins with no laces on. so just before we're gonna go on, I go, what's with the sweatpants and the moccasins? He looks at me, gives me a dirty look, and we go on air. But fortunately, Mark Haynes really loved me. After that, he said all nice things about me, which was surprising. I had to say it.
Okay. What times does this start?
We're on live.
Oh, we are. Okay.
Should have
We're
mentioned
on.
that. Should have mentioned that.
Mike Covell. One time, I did an interview with Mike Covell, and I'm yapping away, and we're talking, and I said to him, "So when do we start?" He says, "Oh, we started about 15 minutes ago." I was like, "Oh, okay." He goes, "Yeah, always roll the tape," he said.
Yeah.
All right, hold on a second. We're going to get started here. I'm just still setting up my screens here because normally I don't.
Mark, somebody's asking what microphone you're using.
I don't have to use all this Zoom stuff. This is my sister actually got me this microphone. She was using it. It's I don't know how to pronounce it.
It's the same one I'm using.
ONO. Yeah, and then I told
you told me to get this.
Yeah, it works pretty good. It's cheap, but it works really good, and I like a good microphone, and it works really good. I'm just setting up. Hold on, I just got to set up my other screen here. Got my order entry on one screen, and I got Zoom things going on and all kinds of stuff. So, all right. So now, if I share my screen, let's see what we got here. Okay, that came up.
It did.
Okay, great. All right, so we're going to get started, I guess, here, right? Let me just.
Yeah, let me, I guess, kick this off.
This Zoom is kind of driving me crazy. It's got.
You got to move that floating thing.
It's floating bar is hiding some of my stuff on my screen. So I just want to get this right here.
So let me start off by just welcoming everybody to the 2021 Master Trader Program Live Trading Day with Mark Mינארווני, guests David Ryan, Mark Ritchie II, and yours truly, Bob Weissman. Today is going to be an entire live day right through the closing bell. You're going to have the chance to see Mark's pre-market routine, screening process, how all these guys handle the opening bell right through the day. If there's trades and we're going to take them, we're going to obviously be showing them to you in real time. We'll also have Arusha Paris from Marcus Smith on to go through some of the features of Marcus Smith, our sponsor for the event, as well as having some time with questions and answers accordingly. And with that said, let me hand it off to Mark Mינארווני.
Okay.
Recording in progress.
All right, let's take a look here. I'm just trying to set my screen up here properly. Move this up a little bit here, see if I can get. No, that doesn't do anything. Okay, so we're going to go over. We're going to go over how we set up in the morning and sort of a pre-market routine. I do most of my analysis the night before. Mark Ritchie, I know you like to do things in the morning, and David's like me. He does his work the night before.
Because it's 5:37 my time. So I would have to get up at 3 to get ready for the time that I put in to come up with my name. So I do everything the night before on Sunday.
Yeah, that's true. That's true. I'm not an early morning person for thinking, so I try to get as much sleep as possible. I stay up kind of late at night, so I do my work at night. And then, I use Market Smith and we're going to have Arusha here. We're going to go over Market Smith later on. But I use Market Smith for screening. And if I just hold on, let me just show you this full screen here. So there's my screens here. I mean, I mainly just run a screen that has, and again, you can go in and if you click right here and go to weekly, and I feel honored to be right next to William O'Neill. You get the Mינארווני trend template right here. You click this 5 month, and then it comes right down here on the left side. You can see you have my 4 screens. So, and I know, Dave, you like to use the 1 month sometimes, and I guess, do you use this as a qualifier and then you add criteria to it, or do you just run the screen and just look at what it brings up?
Oh, I just run the screen and see what comes up.
Gotcha. All right. Because you can use this, and we'll go over this in more depth. I like to let Arusha go over Market Smith, sort of the features, because he's so good at it. And I always learn something from him every year that he does this. So again, if you hit the 5 month here, you see there's 983 stocks. So it gives you all the stocks that are in a stage 2 uptrend. So you automatically have those, and then you can sort. If you want to sort off of high, how close they are to a high, sort by relative strength. You can move over here and sort by composite rating, RS. We can just sort here, go by RS. So now you'll get the highest RS first, and they'll be in a stage 2 uptrend. Now you can also use this as a qualifier, and you can add it to your criteria. Or start it as your criteria, which again, I'm going to let Arusha show you that, and then add criteria to it, so you can use it just as a cutoff. Also, you have the 1 month. You bring the 1 month, that only has 14 items. That's going to be much more selective, because these are stocks that are just starting to turn up, and you're getting that initial stages of a potential stage 2 uptrend, and that you'll find power plays with this, and you'll find what I call an early turn. Just click here, and now you can hit spacebar and just go through. And here's PHI. You can just go through here like this. See, you hit the spacebar, and it'll just go through the stocks, and you can look at everything and see what's meeting your technical criteria. Dave and I tend to go through this really fast, and this is one right here. See, this MRAM is a perfect example of what the 1 month screen will find. So you can see this explosion here. This is the potential power play. So this goes on my list. And if you go over here, you can see I have MRAM right here on my high on deck list. And it's not yet gotten to the point where I'd be ready to buy it, but it's pretty close. So let me just go over again. We're going to go over Market Smith later on and screening. Let me just go over my screen setup. We can certainly share Mark Ritchie's screen if he can, and David. Mine's pretty organized. What I do is I run my screens, and then I put stocks in 3 categories. My watch list, which you can see is not that big. This is actually watch 2. Sometimes if they're a little further out, I'll keep a second watch list. Some things I'm just keeping an eye on. Watch, high on deck, and then my buy alert, which will end up being the names that I'm looking to potentially buy that day. And then from there, you see buy stop over here. If I'm ready to buy something, I'll move it over into my buy stop category here. So let's just go through. Actually, let me just show you my setup here. So I just have a daily chart. This is a 5 minute, which I don't rely upon much. Usually I just open this up and I'm looking at a daily. I have a daily, and then I go over here, I have a weekly. This is pretty much what I rely upon, just a daily and a weekly chart. I don't use candlesticks. I don't use anything fancy. A few moving averages. You got a 50-day, right here is a 20-day, a 50-day, and a 200-day. But I've already made that decision. The stock's in an uptrend, and all that, those decisions have been made of the stocks that I'm looking at. Right here, these are positions that are open on our platform. I actually went to cash. Whenever we do this, I start with a fresh slate, but we haven't officially sold these. These are swing trades. But these are the positions that are open. You can see I can screen them. This is the this system here is the e-signal. The reason why I like this is because I can have portfolio management. Like here, if you want, I only have the quantity as one share, but you can put your quantity. It'll show your cost basis, your percentage return. You can stick in notes there if the earnings are coming, and you can customize this. And then you can actually collapse these too. You can collapse these windows. Like I have the indices right here. Open it up. Here's all the indices. Right, I can close them. Here's a list of all my sold names that I recently sold. You can see, keep a whole list of those. This actually goes back quite a bit. I probably got to clean this out. But whenever I sell a stock, I move it up to my sold. And then I have it in full positions, half positions, quarter positions. These are positions that we scaled some out of already. So you can see, some of these names like an RVLV, we're up about 17.5% on it. Bought it back here. This is coming out of a perfect. You can see, look at this consolidation. Now, this is everything we talked about. Everything we talked about over the last, how many days did we go? 6 days, 7 days. And we talked about the VCP. Here it is. I mean, you have everything here. You've got the VCP. Let me where's my drawing tool? This is one thing I have to hide. Hold on. I got to hide this toolbar.
And real quick, guys, you're asking some Market Smith questions. Mark is not going to answer those questions. We'll wait for Arusha for that. So no need to type in your Market Smith questions here.
Yeah, well, I mean, it's better off. I'm probably not going to get deep into Market Smith myself because I'm not the expert on Market Smith. Arusha is, but I can tell you how I use it. David will tell you how he uses Market Smith. We've got the whole day here, so we're gonna talk about Market Smith. We're gonna go over everything. So don't worry, don't panic. We're gonna get to everything. So let me just show you real quick this RVLV. If you're not an MPA member, then you don't know this trade. But you see this came breaking out here, and you got the VCP, you got the tightness on the right side, right? And you can see also, hold on, this thing, you won't see it, but this pop-up is in my way. Can I get rid of that? Yes, I can. I'll put it down here. You can see here, the volume dried up, and it came out on volume. Now you also see you got the reversal, you got the squat, and then you got the reversal recovery a few days later. Like this pretty much has all the characteristics. We haven't even really gone through a natural reaction yet. I mean, if you want to call it here, you got 1 day. So you count the days, it came out. You can even, you want to use, as it officially broke out here and took out the, made a reversal recovery, maybe 1, 2, 3, 4, 5, 6 out of 7, 8, 9 days up. Last few days about flat. So far acting pretty good. If you want to play it for a bigger move. So some of these names here, Airbnb, bought that right here. Had a little cushion going into earnings. Took some off the table. We scaled out of some of it, but holding a small position for a bigger move here. CFLT was another one. This one bought this coming out here. Again, everything we talked about, we do in real time. Bought this coming out of this. This is a primary base. This is your first. You can call this your first base, but it really wasn't that viable. This right side was kind of sloppy, so I would call this your first primary viable base. This was, had a tough right side too, but I bought it, and that's being held as a partial position right now.
Mark just want to let you know Arusha's in the house as well.
Oh, good. Hey, Arusha.
Hey, Mark. How's it going?
Hey, man. I haven't seen you in a little while.
Yeah, seriously.
How's it going?
Good. It's market's always fun.
Yeah,
and I've enjoyed the seminar. I got a chance to watch a lot of it, and keeps getting better and better, guys. Well done. I continue to learn a ton from you guys.
Awesome. Thank you. Appreciate it. So just going over, I'm going over my E signal right now and just showing my setup here and going over a few names that we recently purchased on our platform. And then we're going to go over here the buy alert list. There's some names here that I'm looking at. We'll get into Market Smith in a little bit. What time is it? 8:48. So what I do is now let's, because I know you guys are interested. We're pre-market here, so we really got to go over our pre-market routine. Let me switch over. Let Dave talk a little bit, and then Mark, and then we'll come back to this and we'll look at some of the ideas that we've all found, and then talk about how we prepare, for the day to potentially purchase some of these stocks. Dave, have you found any stocks or potential setups?
Not too many. I mean, I've got a few. I see there's a number of semiconductors that have formed kind of nice little tight, sort of high tight flags. Alpha and Omega Semiconductor, AOSL.
Hold on, I'm going to make a little list for you right here. Okay, so that's what was the symbol?
AOSL, Alpha and Omega Semiconductor.
Yep. Oh yeah. Okay, this run up here nicely.
Another one, Onto Innovation. Also, that's just in the equipment. That's ONTO.
Yep.
That's got a nice that. Now these are fairly short-term patterns. NXPI, which is NXP Semiconductors, actually looks like a nice little cup and handle. Looks like about a 10-week base that it's forming. Relative strength is 79. So this isn't one of the stronger ones in the group. And so maybe it's lagging a little bit, but it looks like it's setting up.
Mm-hmm.
Let's see. This one's extended, and it's a very short. I mean, it's only really 2 weeks. Semtech Corporation, SMTC. And then, on the other side, though, I saw a number of groups that were rolling over, which is not a great sign. Shipping is not doing well. Gaming's not doing well. Oil and gas. There's a number of oil and gas stocks that broke the 50-day moving averages, which is that's been one of the stronger groups. But I guess the price of oil came down last week. It's crude is up a little bit this morning.
Yeah, the dollar's been on a tear.
Yeah, and so that's why some of those, but there's a few of them that have come back, like MTDR, Matador Resources, hit the 50-day and might bounce.
Is it MTOR? No, not MTOR.
MTDR.
MTDR, that's right, yeah.
And so that might get support there. SM Energy, I think, did the same thing. Yes, but it gapped and the volume increased. So, but I like to, sometimes you get some great buying opportunities on a pullback to a previous base and hitting the 50-day. But I'm a little bit worried that a number of the stocks in the group broke hard. So I'd be a little bit careful of that group. Then let's see.
I feel like we're doing an IBD live here.
Yeah. Then Expeditors International.
Exactly. Yeah.
EXPD is another one that looks like it's setting up. I mean, it's got about that's 35 months, maybe even a longer base. And I would think that these guys, I mean, look at the earnings are very, very strong. That these guys would be doing well, especially when everybody's trying to get product to market, and there's such a backlog at the ports. So those are some of the names that I've been looking at.
Okay, so let's Mark, Richie, have you come up with anything? That's not on my list, I guess.
Well, yeah. I guess my best idea, if I had to trade something today, I'd be looking at Build-A-Bear.
Me too. I'm looking at that.
99 relative strength, triple digit earnings. I mean, it's an $18 stock, huge base, big volume on the left. I'm probably not buying it, but if I was, I would only be taking a time. We're going into holidays too, so it makes sense. Leisure and entertainment classic, for growth group stock. But
we had this base trying to form right here, and then you see it form that right side, but couldn't come out. So now it came off. You've got a pivot failure, and now you've got a reset, and it's tightening up a little bit better here. Volume is quieting down. I would like to see it quiet down a bit more. I think this is probably a little bit crowded. Look at the weekly here. You can see you had a big move here, and now forming that base right here. So not my favorite, but again, it is one that's on. If you can see over here is my buy alert list. And again, I'm not finding anything really crisp, to be honest with you. It seems like money is starting to run back into some of the bigger names like Apple. We bought Apple last week, and it broke out nice. 3 days up, boom, came right out here. But that's a perfect little cup with handle. And it just seems like we're getting thinner and thinner. Go ahead. I'll keep going, Mark. I'm not sure if you had anything more.
Well, I mean, it's sort of like you and I talk about scraping the barrel or bottom of the barrel a little bit to find there's not really any super crisp ideas. Like there was nothing that I saw that I was like, wow, I've got to buy this.
Mm-hmm.
In fact, to David's point, I think there's probably more deterioration. And Mark, you were saying the same thing. Or there's enough things that also have my eyebrows up a little bit to say, I don't think I want to be getting aggressive. I mean, a few other names, this SEDG, that's one I'm watching. It's just a little short.
Meaning short in duration.
Yeah, it's just
right. Not a short play.
Yes. It needs a little more development on the right side.
Yeah.
Now you're talking my language.
So yeah, I'm not seeing a ton. And I think David highlighted. I think semis is one area too that if they put in a little more time would be interesting.
Yeah, I mean, I was talking about short sales. I don't really do a whole lot of shorting, and I have to say that the amount of money that I've made in the market, well under 1% of it has been made on the short side. So I think shorting is unnecessary. But plus, in this current environment where you have this whole Reddit situation where stocks should just rocket on some type of social media news or explosion, the short side I think is more dangerous than ever. I don't know, Arusha, what do you think about with seeing some of these names that all of a sudden the short side has unlimited loss potential if you're short because a stock can go up indefinitely? That's made me very nervous about entertaining shorts. What do you think about this environment?
Yeah, well, especially this environment, but it always seems like everyone wants to short the stock that's going up the most.
Yeah.
Right. They just can't stand it. And you saw with Tesla last year or a number, even like the GameStop, right? People are trying to short that. It's like, look, you don't have to buy it, but don't short it. I mean, that for whatever reason, it's going up like crazy. And yeah, it's very, very dangerous. And so they'll learn the hard way.
Yeah, well, especially trying to short, a leader like Tesla.
Right.
I had the privilege to meet Ron Barron years ago in the 90s. A very good friend of mine who's passed now was really close friends with him. And Ron Barron, of course, is a value investor, completely different than me. Actually, my friend was trying to put us together and get Ron Barron as my client, but it just wasn't a fit because we were completely diametrically opposed as far as the type of stocks we were buying. However, it was interesting because I heard Ron Barron recently talk about Tesla and saying that it's still undervalued. So, a value guy's even looking at or still holding Tesla here up. So it's pretty amazing. But, general rule of thumb, Dave, we're not trying to short something like Tesla too often, are we?
No, I tend to, I mean, even in this market, I actually do like having not a lot, but 2 or 3 names on the short side because it actually gives me a feel for if the market is deteriorating. And what's interesting about this market, it's getting thinner and thinner, and I'm finding more and more stocks that have built tops that have gone on for 3 or 4 months. And these are some stocks that have had some big moves. But I like to keep an eye on that area, because if I can't find anything that's telling me, okay, just stay away and just keep on concentrating on the long side. But there are times where I start seeing a few of the shorts that I've got starting to work out, and it gives me a feel saying, hey, wait a second, maybe I'm starting to make more money on the short side. Yep. And I'm struggling on the long side. So it just gives me one more indication of the direction of the market.
Yeah, Mark. Okay.
Go ahead.
I was going to jump in to say, so guys, just so you understand, when we do short, we're not looking for the highest flyer, overpriced Tesla on a tear that's going to rip your face off when you're wrong, way more often than you're right. And I do see some of you people here are typing in some names that are in clear downtrend. So we're also not looking to short names that are already down 20, 30, 40, 50% either. So
wait, hold on. I want to make sure you're clear. They are down, but not, it depends. In the short term, they could be oversold, but just be careful, Bob, because people take things very literally. We actually are shorting stocks that are down. Bob, you short stocks that are down sometimes 50%. So you got to clarify.
Yeah. Okay. So like an ALTM is a better example of a name that is type of behavior that we're looking for. A big break with a very no reaction, no bounce, no rally, nothing. Nobody's attracted to this name after this big break.
Right. Now this stock is already down 33%. That's why I want to make sure Bob is congruent with what his actions are. So what he means is down, getting extended, but we're looking to short them just like we would, a long, as far as coming out of a consolidation or maybe in a pullback into a consolidation.
Right.
But this is a classic ledge. I don't want to get into shorting here because I do not want to turn this into a shorting day here. This could really go off the rails here. We start talking about shorting too much. So now we're going to have 8,000 questions on the shorting patterns. And let me just say this again. I've made less than 1%. It might be 1/10% of my money on the short side. All right. So I'm not good at it. So I'm not the guy to go to about shorting. I'm not good at it. I think it's unnecessary for lots of reasons. It's much more risky. There's obviously a stock can only go down 100%. So a 20 or 30% profit on a short is a gigantic move. So you've got unlimited upside, unlimited downside with the stock rallying against you, and limited downside. It's everything the opposite of what I want to accomplish. I want to have asymmetric leverage, and I want to have unlimited upside and limited downside. The short, especially with the way things are now, where some of these stocks can gap up 100%, it's just insane to get too crazy on the short side. Plus, like I said, it's not necessary. The market's in a bull market much longer than it is in a bear market. Bull markets last a lot longer, go a lot further. There's a whole bunch of reasons why. So I don't want to get too deep into the short side.
And Mark, I was going to wrap up. For those that do know me, my career that I refer to as 17 years BM before Mark and now 17 years AM after Mark is where I can tell you I've made much more of my money since learning how to trade Mark's methodology than I ever did in 17 years of my shorting path. So absolutely Bob everything that Mark said.
Yeah, Bob really was big on shorting. He still has. I think you still have you still like the short. There's something about it. But now, Mark Ritchie, you've had incredible results and huge returns. Mark turned $100,000 into like $15 million over 10 years. So that's a pretty good annualized return. During that time, Mark, what do you think? What percentage of that profit came from shorting?
Very little, almost none.
Right. So again, just not necessary, not necessary. Now, not to mention too, I went through the crash of 87. the bear market of 90, two of the biggest bear markets we've ever seen in history. Of course, 2000 top, which was a multi-year bear market. NASDAQ down, 60, 70%, average NASDAQ leading stock down 80%. 07, 08 into 09, one of the worst bear markets. Of course, the recent debacle. I've been through 8 bear markets. I would guess that David's been through at least 8. And again, through all that, shorting was never necessary. Let me get back because I don't want to get too far off track here. I do have, this is my little short alert list here of some names. You can see them. We'll see as we go through the day here. Let's see what transpires. I want to get to my buy alert list here because I do have BBW also for a potential long here, setting up on this right side. And another nice thing is here, so you can just zoom up real fast. So right here, just look here, and you can see we're tightening up here. We're tightening up. The volume, I would like to see the volume come down a bit more. TMST, this is another one. If we zoom out here, you can see it tried to run up here, came off of this little low cheat area, but was short-lived and now has built a larger base. So now you've got this big base forming. And just going back to what David and I talked about, you find the pivot, right? And you draw a line across. All right. So now we've drawn that line. You can see this is where the supply is. The supply issue is right around that $16. He'd only traded a little bit above it here and one day or so above it here, a couple of days above here. And that's where you've got the supply. So that's where we want to see the stock tighten up and then move out from there. Right now, of course, if we get a low cheat, we're down here, right? You set up a low cheat. Well, then you're running into that supply. So now you've got to start looking if it's real steep, if there's a lot of nearby supply, and the further you get away from it, and the deeper you go, I should say, the closer you are to it and the deeper you are, the more dangerous it is. The further away you are, and the shallower you are, the less dangerous it is. So that there's not really. I know you'll probably ask some what are some hard, fast rules? How many weeks away from it? How deep? This is where it really becomes sort of an art, and you've got to start learning how to interpret, reading, what kind of hand you have, whether this is a pair of aces, kings, or just, 8, 7 off suit, So again, I would say this is, this setup right here, is probably, a middle pair, this isn't the greatest. Now, of course,
Mark, if I could just jump in real quick.
Yeah, sure.
Just had a announcement that President Biden is renominating Jerome Powell to the Fed chairmanship, so the market is reacting positively to that.
Okay. Well, I don't even have, I can turn, hold on, CNBC on. I try not to look at CNBC too much, but I'm just going to put it on the background. I usually just look at it when I first wake up and just see if we're going to be up big or be down big. So I think that's probably somewhat expected. So again, I've already looked at these names last night, right? And I've looked at them in MarketSmith. Everything I do is in MarketSmith as far as the screening is concerned. So I've looked at these names, and one of the things here, so we'll go back to the TMST. Okay, we got a 97 relative strength. You can see how everything's laid out here, quite perfectly. You've got everything that I showed you about fundamentals, what to look for, breakout year, acceleration, growth rate, acceleration versus the growth rate. It's all here in one bird's eye view. This is why MarketSmith is amazing. And MarketSmith was built by William O'Neill, David Ryan, the people at O'Neill and Company, which this is all built around what works in the real world. This is built around the study of the biggest winning stocks. So all the relevant information is here. You can go right to a weekly and jump from your daily to a weekly. You can even look at a monthly if you want to get a really long-term perspective. And you've got the earnings up here, the annual earnings in the left-hand corner. You've got the quarterly earnings here that are already adjusted year over year, and you have them sequential. You've got profit margins, gross margins I have here, but you can go up and you can change right here, I believe it is, right? In the gear, yeah, you can go to pre-tax margins, after-tax margins, if you want to change those and look for the acceleration. So you can look for the code 33 right here. As a matter of fact, I have a code 33 screen right here. Hit code 33. and I'll show you this screen right now if you want. 49 names came up, right? I go to right here, and here it is: acceleration 3/4, sales acceleration. I actually have 2/4 of sales acceleration and margin acceleration. So you can see I have relative strength 77 or greater. A few more parameters here, 25% off its high, and that's going to give me not only the code 33 that meet that code 33 fundamental criteria, but also I've got some additional technical criteria. And now I can go through. I click on these, and now you just hit space bar, and you can go through the names. What's better than that, right? So now that we're on MarketSmith, Arusha, just curious, have you found anything worth taking a look at today as far as anything that you think is investable, tradable here?
Not really. Really the names that you guys just mentioned. There isn't a lot. It seems like more stocks are going like through bear markets already than not. Yeah. So. Yep.
Yeah. Stan Weinstein. Of course, we did an interview with Stan Weinstein, and he called me the other day, and we had a conversation. And then he actually gave me a follow-up email, and then emailed me again yesterday, and just to give me a heads up that he said that he called it a fractured tape. And we've been on the same page about our view of the market. So he's been contacting me and keeping in touch with me. So that's been really nice of him. But yeah, it is definitely a fractured tape. Let's go through some more here. So these are my buy alert names for the day here, CDXS. So this one here, you can see this might give you a little cheat area. Now, first, let's take a look at MarketSmith, CDXS. First thing I do, especially if I'm looking at something that looks like it's a power play, I want to see the relative strength. I want to see that relative strength way up high. I mean, it's got to be in the high 90s. If it's in the lower 90s or below that, then it's not as powerful, doesn't have the RS, and I might still trade it, but I want to see this number way up there in the top 1, 2, 3% of RS. Take a look at a weekly. And just to see if this is, an extended move, or remember we talked about breakaway moves and extended moves. So a breakaway move is something that comes out of a period of relative dormancy and is in a new stage 2 uptrend versus something that might be on its 5th stage base. And now you look at it in a vacuum and you say, oh, this is a power play, but it's run up, 100%. But after it's already gone up 1,000% over 5 bases, I think Tesla would be that situation where maybe not a power play, but Tesla has made this big move, and it's looking more. And we'll talk about this later. It's looking more like, and I'll bring a weekly up. Let's just bring up Tesla. I know I'm jumping all over the place here, but this has come a long way here, and we did come out of a base recently, but I mean, this looks like, more of a climax action and later stage action than something new. Although again, this is not a stock that I would short. It's just been too powerful. All right, back to CDXS. So again, let me go back to the daily. You got a little cheat area forming right here. This might be, maybe as this turns up, we could buy this. Try to get a trade out of it. If we bought it even turning up above this high here, if it went to the lows, you're looking at about a 7-8% stop at the lows. NUE bought some of this on Friday as it started to turn up here. But again, this looks like it still needs a bit of work here. TIL. So again, this came off pretty hard here. You're coming right back into that area. There's a good amount of volume here. You can see this big spike in volume right here. So this isn't the nicest right side here. You see the volume is kind of, it's actually quite high here. So we're not seeing that selling vacuum. I'd like to see the volume really come down. But it is a big, large base here. Who knows? This might break out for a trade. Been watching this XPEV. Again, this is one that needs to tighten up over here. Probably not going to be able to do anything with this today because it's still a little too sloppy. MIDD. This isn't too bad. It's trying to tighten up over here. You got this one day right here where you got a good close. It was an engulfing day. So I'm immediately going to look at that. Let me see. Was that earnings? So that's MIDD. I'll go over to my MarketSmith, MIDD. Let's go to the daily. And here's another nice thing. Yeah, see right there. That's what I thought. Earnings. So you can go here, and in MarketSmith, it shows you where the earnings were reported. Now, this is great. This is a relatively new addition. For many years, we didn't have the earnings. They only had this information on the Panerai, which was, I don't even know, what's it called now? The O'Neill Institutional. It was Wanda. Then it went to Panerai. Did they change back to Wanda, or is it still Panerai? Panerai or
Russia.
I lost Arusha.
He's on mute.
Arusha, you're on mute.
Still, there's
Sorry.
Just so you know, technical difficulties never happen on Zoom.
I'll come back. I'm actually on another call too, so I'll be back in 10 minutes.
Okay.
I have 1 year on, but I'll be back in.
Okay, go ahead. All right, let's take a look here. Well, we're finishing up anyway. ADNT. Again, trying to, this is a cheat area. It's a bit sloppy, but, it is buyable. This GBL broke out. These are ones that you can see I have, actually, I'm going to move that ADNT down. GBL broke out on Friday. I like that breakout. Again, I would have liked to see the volume come down. It is a little bit of elevated volume here on the right side. So that tells me that there's some supply there, and you had a big decline over on this left side coming right into it. Yeah, not the best situation. I'm not finding too many really great situations. So this VEL is super thin. It trades like 20,000 shares a day, so I wouldn't be able to get any size on this. So, but it is tight on the right side. Financial. Let's see what else. DRVN. So this is trying to tighten up on the right side. You had some volatility here. Again, you can clearly see how the reversal right here, and you sell off and you come back up, you hit that same area of around $33 and sell off, come back. And you can clearly see that right here is the supply, is right in that 33 area. So this is where we want to see it tighten up and then come out and clear that area. So then if you draw a line, if you do what David talks about and just draw a line here, right here, again, you can see that at that level, you've only traded above it on a couple days. You've got like 2 or 3 days that you traded above that level. All your pullbacks, you rallied up to that level. That's where you came off from. So it's clear as a bell here that that's where the supply is, right? So now what we want to do is we want to see it. We don't just want to see it take out that level. We want to get it to take out that level from a tight VCP right side. This is where you get that explosive potential, where it can just jump right out of there and you get it a big profit right away. Is timing this properly by waiting and being patient enough to make sure that this sets up right into this area and then comes out from there. It's not just that you just draw trend lines and you break the line and that's a buy. That's very remedial and it's not going to work too well for you. I can tell you that right now. If you want these explosive moves and to really have high probability setups, you've got to look for the volatility contraction and get that tight right side with the volume dry up and everything that we talked about to coincide with this area of confluence, if you will. But this is one that I'm definitely watching, and it has the potential because you've got, now, of course, I'm going to do some measurements. Another thing I like about the e-signal is you have this measurement tool where you can just go here and go down here. See, that's about 37%. Right. So that's not too excessive. All right. And it's way on the left side. And we've gone through a number of iterations here of tightening, which we call fractals, where you have patterns within patterns. So it's good when you see that volatility contraction happening over and over and over. That's the towel being wrung. Remember we talked about wringing the towel, getting the water out. This is that process happening right before your eyes, where you see the supply is coming out of the stock. And as you get to that right side and you tighten up on that right side, the supply has stopped coming to market. And when that intersects with that area of resistance, if you want to call it, I call it supply, and you come out from there, that's where you get what Jesse Livermore referred to as the line of least resistance. You should study Jeff Livermore's work because Livermore was a trading genius, way, way, way ahead of his time. I know a lot about Livermore, and I was fortunate to as Richard Smitten. I don't know if you've heard of Richard Smitten, but he wrote some books, and he actually bought the rights to all the Livermore works. And Richard Smitten, I haven't seen him in a long time. I hope he's even okay, because I haven't heard from him in so many years, but was a friend of mine, or is a friend of mine. And I used to see him quite a bit. And he knew everything about Jesse Livermore. And like I said, he eventually bought all the rights and bought all the works from Jesse Livermore's family. We used to, he loved to talk about Jesse Livermore. We used to talk about Jesse Livermore all the time. So I learned a lot about Jesse Livermore through Richard. Okay, so let's see what else. Let's see, Arusha, are you back? Do we get Arusha back?
Not yet. Sorry. I have like another 10 minutes. This call, the other call I'm on, is going way too long, so
Gotcha.
I have to talk on it for in a few minutes.
Okay, let me know when you're
Yeah.
when you're ready.
Sorry.
It's okay. Let's see. So, high on deck here. So I've got now. There's a bunch of potential power plays. Mark, Richie, you remember we talked about how in a tough market we like to gravitate, and I should say in any market, my go-to stocks are always the most powerful, highest alpha. But in particular, when you have a tough tape, you want to go to the names like something like a RBLX here. Look at this move here, right? And you've got, this was a recent new issue, right? So you went through this, basing, if you will, this sideways action. And now you've morphed into a potential power play. We went up here just about 100%. And again, if it's 98%, even 95%, you can cut a little bit of slack. That's close enough for a double. And this is pretty much 100% a double in just a month and a half or 2 months. So this meets the first criteria for a power play, but now we need a low risk entry point. I mean, this may keep going. And if you want to take a chance, that's fine. But again, this could also come in 20, 30% very easily, very quickly, and you'll be underwater real fast. So what we want to see is a consolidation from here, and then a minimum of 10, 12 days and upwards to 3 to 6 weeks of sideways action, and then coming out of there, that would be a power play. But the reason why we want to go with these real powerful high alpha names in a tough tape, or even in any time, is because they're in their own cycle. They're in their own world. You see, if you were to look at the Dow or the NASDAQ, it doesn't look like this, right? This isn't being influenced by the market. It's not up because the market's up, or even down because the market's down. This is in its own world right now, whether it's, because of for whatever reason, whether it's an earnings report and it's better than expected and it sparks this post-earnings drift, or if it's a drug company that all of a sudden has this great news on their approval process, and maybe there's better prospects for FDA approval, or they just tested something and got great results. This sets off this reaction, and could only be just the beginning. But again, you're in your own world here, and you want to decouple from the market. You don't want to be correlated. The whole idea is to be uncorrelated from the market. If you're correlated to the market and your portfolio is going up when the Dow goes up, down when the Dow goes down, you're going to get market returns. So you've got to figure out a way to uncorrelate yourself. And that's through this discipline that we're showing you. And also another way to uncorrelate yourself is to literally unplug. Like I have right here, you can see here, I have US indices, but I always have it collapsed. I never look at them. I shouldn't say never, but I don't look at them while I'm trading all day unless I want to see what's going on for some reason. Maybe, my stocks are all under pressure, and I'll take a look. What's going on? Is the market down big here? But otherwise, I keep that collapsed. And so I'm not looking at the indices. I'm looking at the individual stocks, and I'm letting that completely guide me. There's a couple others. Let me do a few more because we're getting close to the open, and I want to. Hold on a second here. Let's look at a couple others here. So this was AUR. I mean, holy cow. This went up like 75% or more in 3 days. So this just blasted off to the moon. These are all potential, what I call poles. So you get that move up, and then you got to look for, then you got to find a low risk entry point, which I have not seen on some of these. KZR, XPOF, another one. This has made a big move in a short period of time here. We talked about this MRAM, ANVX, and we got JWEL. Another one. Look at this move. Went from $6 up to 15. Big move here. Something's going on. You know, and we took a look at the weekly here. You can see it was an IPO. So you just made an all-time high. This is another thing. If you read Jesse Livermore in How to Trade Stocks by Jesse Livermore, he talks about when an IPO goes through a period after the IPO and then marks time and then makes an all-time high, that's a pretty good buy point. That's a low risk buy point. I found that to be true, that when an IPO goes through a base and then makes a high, that's a very good sign. So when I see a recent IPO that makes a new high and it's a power play, I'm really, really interested in that, because we've got a whole bunch of things happening that are telling you something really great is going on. Look at this volume too. Look at this weekly volume. It's the second largest volume since the IPO. And it's on the upside, and we're ripping to the upside, setting up a power play or potential power play and making an all-time high. And you're not even that far from that all-time high. So you're relatively early. You know, you're not too far from the initial IPO price. This is the earliest that you're going to get on a stock, is when you have an IPO set up. So I'm very interested in this. The problem is, though, I don't have any price action for a little base here to get on a low risk entry point. So I got to be patient and wait. This is where, you know, this stock might triple from here, and I'll just stay away from it. If it doesn't meet the criteria, if I'm not finding the low risk entry point, the VCP, I simply pass. Let's see. Anything else, guys? See here. Mark, you finding anything else?
No, I mean, I have this RSI on a watch list as well. It's lower quality though. I mean, it's sort of one of these that doesn't quite have the power. It did double in the time frame and is trying to put in a right side. It's not. It's a newer issue. It's in that gaming area, I think, as well. But
yeah, I like it. I think I want to move that to at least my. I'll put that on buy alert here.
It's worth a watch.
Yeah, let me look at it though. I want to see it in MarketSmith RSI. First thing I want to see is the relative strength. So we got 95 relative strength. Let's take a look at the weekly. Yeah, so you're coming back up. So some might say, well, this is overhead supply. That's a ways back. It is some overhead supply, definitely, but it is a ways back now, and you've had a big move off the lows. Big volume here. So yeah, it's in the gaming area. Gaming has been, and this might be, you know, subgroup, but gaming has recently come under pressure. It was looking pretty good for a while there. MGM and a few names where look at MGM here. Well, what's going on here? We're stalling out here. Okay. Yeah, MGM came out here on this big breakout right there. Very tight. You get a nice breakout. You look like a natural reaction, recovered, and then it started to fail here. And that was, you know, that was where I got out of the stock. But again, there was a few of these. Boyd was acting well for a while. See, tightened up. And you can see clearly now. You see the violations? Here it's setting up in a nice big base, right? This looks perfect. So it should break out from here. Natural reaction, tennis ball action. What's happening? It's going the opposite direction. Look at all the lower lows. 1, 2, 3, 4, a bunch of lower lows. Get them below the 20, the 50, the 200. Relative strength 77. RS line down. Everything's is going into the violation camp now, right? So that's, if you're in this, you should be getting out of it. It hasn't hit your stop yet. This is not looking good. And then of course, here's another thing is really good about MarketSmith. You hit the weekly here, and right here it'll show you the top 5 RS names. So you can come over here and see the top names. Maybe you're looking at this stock, but now you see this 77 relative strength. This is clearly not the leader right now. So I'm going over here and I want to see the leaders. What's the leader doing? Here's Golden Entertainment. You see, that's in a base. So now I can immediately go over to the leaders. This isn't a base, but I'm suspicious of this because of what's happening with some of these other names. So let's look at a few more. Century. This is one that I owned but got stopped out of. Again, you see it was setting up here, and then over here was earnings. And since then, it may still work, but it's getting squirrely here on the right side where it should have just went. The train is not coming in on schedule. So go back to the weekly. IGT. I'm just looking at a few of these that recently came off here. So you get to look at the top relative strength stocks. Let's see here. So we've got only 2 minutes for the market to open. And
I'm back, Mark, by the way.
okay. Yeah. So I was asking, we got this earnings information here. I love the fact that we can now see the reaction to earnings and the reaction around earnings, and we can look historically. I know this was something that I remember was in the O'Neill institutional product, and over the years, MarketSmith has been really great in bringing in a lot of the stuff that was for the highest end users. The O'Neill institutional product is a multi $10,000 a year product for institutions only. But now a lot of that information, like the margins and the earnings, have all come in, and you're getting, what a bang for the buck. MarketSmith, you're getting like 95, 98% of the institutional product for like 1/20th of the cost. But this has been relatively newly added, right? The earnings maybe a couple of years ago.
A few years ago or so. Yeah, I was just trying to add as many things as possible. Whenever I get a chance, I just quickly rush it into MarketSmith. I should say I'm no longer officially part of Invest Visit Daily or MarketSmith, but they've given me permission to. I'm part of O'Neill Global Advisors, but they gave me permission to represent MarketSmith at this event. But
right. For those of you that don't know, Dow Jones bought IBD, bought MarketSmith.
Yep.
And the O'Neill institutional side has been carved out and is still owned by Scott O'Neill and the O'Neill family. And so Arusha is actually a money manager for O'Neill and is a research analyst for O'Neill. So again, it's a real treat to have him here. And he's a consummate pro and expert at MarketSmith because he was the director of MarketSmith. So a lot of knowledge to be gleaned from Arusha today. So we're going to open up here in a few.
You're open.
Well, we just opened.
Yep. Yeah, we just opened 9:30. Okay, let me just get off this screen so I can make sure I see that. This Zoom is driving me crazy. It's blocking everything on me. Okay, I got my order entry up on my other. Let's go to here. All right, let's take a look. So the first thing we take a look here is, how are we opening? So we got BBW's gapping. So that's taken off. Hopefully it's not a bunch of you guys going in here and putting in market orders pre-market. TMST. So here's a perfect example, though, of having names on your list. And so what do you do now? You got BBW. Okay, that's maybe say that's your favorite pick for the day. I don't usually have favorites. I just, whatever breaks out first is what I buy. But so this comes out on a gap, and now it's several percent above the high in this pivot. I leave it alone. Can't buy it. If it goes up 20% from here, then I just have to watch. I'm just not going to buy it. So first thing I'm going to look is how we open up here. We got the TMST up 4%. This XPEV is up about 3%. But nothing really, breaking out here from a tight pivot. This GBL is following through a little bit. This is one that, maybe if it pulled back a bit here, I might look to buy it as it turns back up from the pullback. So we look at open positions here. Is anything getting in trouble? Airbnb. So we're already up on that. And this is, we've already taken some off the table. So now that allows us to go through some of this volatility, play it for a bigger move. Still got about a 10% profit on that. Apple's following through again. So this is day number 4. So this is a great breakout, especially for a stock of this size. Again, we bought it here. You can see on 11/18, which is right here, of course, or actually right here, as we get that day. I think as it pulled back and then we followed through. So now we're on 1, 2, 3, 4 days up. Very nice breakout. Now, if you're a short-term trader, this is where, I've been selling most of my stocks, right into the first move up. I'd say, at least a portion of my position has been sold on the first move up, even on the first day up, throughout the entire year, because a lot of these just fail. They go up 1, 3, 5 days, and next thing you know, they're all the way back down and you're at a loss. So there's been a lot of short-term trading opportunities. A few have done well and held up, something like this SHOO. Again, this was bought on 10/19. Let me mark that on the chart here. 10/19. 10/19 is right here. So right here, see, again, look at how everything just plays out exactly like we talked about. Here's the breakout, but you get the squat. It closes down near the low. A couple of days later, you're back into new high ground. You get the reversal recovery. Exact same thing that happened with RVLV. You got the breakout here. 1 day down, a couple of days later, you're back into new high ground. So you stick with your original stop and you see if you can get that reversal recovery. Let's see, Dave, you got a few names. You were talking about that AOSL. It's up 6.5%. So that's taken off. Again, on a gap. The SEDG is up about 3%. So we did get the market, and this is breaking out here too. You can see it coming right out here. I mean, this could have been bought. Mark, this came out of this little base here. I'm just trying to see how much did this go up. Yeah, so this only went up about 45%. So this wouldn't be a power play. This is just a little small base here. But again, this is coming out pretty nicely here. For a trade, this is probably certainly worth a stab for a little trade.
If things were working better, I probably would have taken a shot at something like that. But like you said, not quite powerful enough to be if that had gone up 100%, I would have been all over it.
Mm-hmm. Now, this AUR is a perfect example while we wait for a base, and you're not going to just buy just because the stock doubled, and you're waiting for that consolidation. Now it's off 16% here this morning. Now, if we measure that off the highs, this is off about 21, 22%. So if this comes off much more and you start getting off 35%, and now it's not a power play anymore because now it corrected too excessively. I mean, you can try it, if you want to play a deeper base, but they're much more failure prone. So the whole idea is when you get this huge price action, you want the stocks that resist the pullback the best. All right. Because that's telling you that this thing is super powerful and there's no selling. Even after this big move, there's very little selling. There's no supply. That's incredibly powerful. So that's what you're looking for. If you have a big move down, that's telling you that there's a lot of profit taking and maybe it's not in the strongest of hands. So we've got, again, let's take a look over here. TMST is now up 7.5%. So that's breaking out here. So again, I'm over here yapping away and I'm not buying anything. I could have maybe bought this coming out. So this is breaking out pretty nicely here. So again, you see this here and, you see how these stocks are up, 7%, 8% just on the breakout alone. This is how these stocks can move very fast. They can move very fast and very big in a short period of time when you come from these VCP setups. Now, again, if they go the other way, like this TIL, we're down about 6% here. See, this hasn't broken out yet. So you don't want to buy the stock unless it's breaking out. All right. You want to buy in the direction of the trade. You definitely, even if you're going to buy it as it just starts coming out and you're buying a pullback buy within the base or within the handle, you definitely want to wait until the stock is moving up. Don't buy the stock if it's down and start trying to guess and bottom fish, because now you've got that momentum against you and you could be at a loss very quickly. Okay, let's see. What else? What do you think, Dave, about this open here? Again, I haven't even looked at the market. Let's see. What do we got here?
I have things
up
all.
0.5%. Dow's up 0.5%. What do you think, Dave? What do you make of this? I thought this was quite interesting. Take a look at the Nasdaq here, right? Nasdaq in the last couple of weeks, new highs,
Yeah.
trending up. All right. Now look at the Dow.